Bitcoin is just pure crypto money. And it's the mirror image of the US dollar financial system. We want to do something different. We think it's better. Maybe it is, maybe it isn't. And so it's a reaction to this system. And so obviously it's going to be very tied to the liquidity considerations of that. So you have essentially the Federal Reserve holds all the cards. They either can turn it on or turn it off in terms of US dollar liquidity. I think, you could have a similar sort of analysis of like Bitcoin Cash and some of these other, go back to the forks of like all the different Bitcoin forks that happened back when we were talking about the block size debate. And was that 2017? How many of those have actually done very well in their price performance versus the asset they were supposed to supplant Bitcoin from that period onward? I think people, in my opinion, don't understand what Ethereum actually is. Ethereum is not money because money has no use. Ethereum has use. You use it to power the applications on this network. Bitcoin has no use. It's just money. Just like the dollar has no use. It's just money. And that's why it's a good form of money, because its value cannot be conflated with actual utility of other stuff. And so because Ethereum's goal is to be this decentralized compute for, this digital existence, let's say that the deflation gets so severe that it becomes so expensive that nobody uses it because gas prices are just too high because of the inflation rate. I think that this is no crazier than the Mt. Gox failure in 2014 in February, no crazier than, the Ethereum and Bitcoin and ICO implosion in early 2018. This is new technology. We're reconfiguring how humans want to do finance over the internet. It's extremely speculative. It's extremely religious and exciting, and there's haters and there's people who love it. There's all this emotion, then you mix money with it. And so I think these events over the last 6 months, let's call it 2022, I would say are par for the course for crypto. After the March 2020 meltdown, there was somebody posted on Twitter, or I saw an email, I don't remember where it was, and there was a chart that showed the complete value of all dApps built on Ethereum was greater than the value of Ethereum. So one of two things has to be true. Either all these dApps, which were down, 95% from the highs of 2017, are just completely worthless, or Ethereum is extremely undervalued. And I took the road of Ethereum is extremely undervalued. And so I went long a lot of it. And very good trade. Covered up a lot of the other bad things that I did with my portfolio over the same period of time. But so that's sort of my, rocky road of Ethereum, and starting in early 2020 and then 2021, you really had this explosion of DeFi and all these new financial primitives. People actually starting to use these things. Hundreds of billions of dollars of total value locked, and you're starting to see the real value proposition of what Ethereum can do and what it's enabled with some really, really smart and innovative engineers and financial technologists to build for this new ecosystem. I think the financial aspect is very easy to understand, especially for a former financial markets professional. I understand trading, I understand markets. You charge a training fee, people come on there, they exchange assets. It's quite easy to understand. Some of this other more meta stuff, I think it's going to take a little bit longer to be recognized as a big value driver for the network. The Bitcoin inflation rate reduces. It doesn't go to deflation after, at least it hasn't yet, after a halving, yet the price still goes up, right? And no, we expect that every halving over a period of many years, the price of Bitcoin will appreciate. Whether or not that continues to hold true, who knows? But it has in the past, was it 3 or 4 times that it's happened previously. So Ethereum doesn't need to go to deflation. I mean, that's even better if that happens, right? In terms of the pro-cyclical nature of the reflexivity of the price and the usage and the price and the usage. But even just reducing the inflation rate, what is it, like 90% or whatever that number is in terms of the amount of ether that's going to be emitted versus the consumption that's happening versus the applications on the blockchain, it's still a massive reduction, a massive change in the inflation. That's what we care about. We don't care about the absolute target at the end of however many decades or hundreds of years. We care about the change today and what that portends to the future. And so, cool. Okay, maybe it's not deflationary. Doesn't matter if the inflation rate was at X and now it's at 0.1 of X. That to me still means that at the margin you're going to have more demand from people who need to spend money on gas than there is supply being emitted naturally through the network. Well, we have a one discrete opportunity. We have a proof of work blockchain going to proof of stake, and you have this massive reduction in the amount of ether emitted. And no other blockchain has this setup like this. And that's why I like this trading opportunity, or this value play for ether, because it's just so idiosyncratic to ether, the average person, to use this network and to feel some sense of security. And that's completely fine, because it didn't advertise Ethereum as being the digital gold of the internet. That's Bitcoin. And so I think people are sort of conflating the two. Yes, right now, because of this, monetary issuance issue and how it's changing with the merge, ETH is deflationary, people are using it to buy gas, the usage, and this whole reflexive process. But if that gets too aggressive, if the price goes too high, then it actually is detrimental, in my view, to everyday person being able to use Ethereum and the applications built on top of it. If we compare apples to apples, and we say, okay, there's a universe of these risky assets that are supposed to protect our money from inflation. So we go back to Bitcoin 2009, right? And we take Bitcoin and we deflate it by the Fed's balance sheet. And we take the S&P 500, we deflate it by the Fed's balance sheet. We take the NASDAQ, deflated by the Fed's balance sheet. We take gold, deflated by the Fed's balance sheet. We take, U.S. Treasury bonds, whatever. Bitcoin outperforms everything over the time period as when it existed, deflated by the increase of the global reserve currency by its central bank, the Fed. Bitcoin has beat inflation. If you look at the whole history of Bitcoin and you deflate it by the system that it's trying to, replace, the dollar, then it's done well. Okay, yeah, it overshot its value and then came down to 75%, but it's still, over the entire lifespan of what has existed, has outperformed. 18 months, Bitcoin has jucked and jived as the liquidity conditions of the dollar have changed. And I wrote an essay about this, a few weeks ago, putting up my little index. And this is literally just like a compilation of stuff I've read in other places. But at the high level, it's the Fed and different, governmental agencies provide the dollars, the base money of the world, for banks to leverage into the financial economy, the stocks, bonds, and whatnot. And so the more credit created by banks, the more business activity. Liquidity goes to where it's best catered to, just like water. And as they removed that, then everything that depended on the credit collapsed. And obviously, Bitcoin is just supercharged to that, because it's this new system. It's only a decade and a bit old, a bit unproven, and so it's going to oscillate very violently with how that goes conceptually. And I created this index. I put the little Bloomberg thing on my Twitter. I think some people created a trading view, but that's the overarching theory, and I think it fit quite well with the peaks and bottoms recently, since sort of like early 2021 to today-ish, in terms of how Bitcoin has responded as dollars became more or less available in the global economy. Bitcoin, ETH, stables, whatever, not the actual currency that they've created out of thin air to hand out to people, but who's spending real money to use applications on the network. And then I go down the list and then I'm like, okay, do I own any of those? Why or why not? Do I not have a position in, or maybe they're not actually a coin. Bitcoin is pure money. There is no utility as of yet, other than being money, right? That's what it is. And so, of course, you're going to have to be very religious about things, because you don't have any other real thing to back it up. It's not like Ethereum, where, okay, there are these applications that are being used. We're lending, we're trading, we're all on this network.